Dollar confusion reigns ahead of the Fed. The Federal Reserve is expected to leave rates unchanged on Wednesday as uncertainty around tariffs makes it tough for policymakers to predict where the US economy is headed. The dollar has risen on the news that Treasury Secretary Scott Bessent will meet Chinese officials in Geneva this weekend for initial talks, but that follows a big dollar sell-off in Asia. Jane Foley is head of FX strategy at Rabobank. Jane, the dollar sell-off gained serious momentum in Asia earlier this week. Why?
It certainly did. Well, I think there's a couple of factors behind that. And the first is the same sort of reason why the dollar was under pressure really all through last month. And that is this asset reallocation out of US assets. And we certainly saw some of the Asian markets picking up steam. There is amongst many investors this perception that in contrast perhaps to last year, the year before, the US growth outlook, the US stock market is certainly not the only game in town. And people are again looking at the sort of rebirth of the growth story potentially for Germany, but also maybe for Japan and other parts of Asia as being really quite interesting against the context of recessionary fears in the US. But there's another story here too. For months, we've been talking about the possibility of a Mar-a-Lago Accord in which the US authorities might push for a weaker dollar in some of the terms, perhaps, for some of these trade negotiations that they're having. And I think that was one of the factors that really had an impact in the movements that we saw in some of these Asian currencies this week.
If you think then that Asian countries are deliberately allowing their currencies to rise as part of trade talks, how far might they go, since surely they'd prefer some depreciation to counteract that tariff impact?
Well, this is exactly it. And we've had an awful lot of volatility, of course, in foreign exchange. And with all of these uncertainties, it seems that the volatility will not end just yet. These have to be worked through. Now, certainly, when we do get a little bit more news about the direction of the trade talks, potentially some preliminary deals with some of those 17 trading partners that Scott Bessent has indicated are potentially closing to the finish line for the between the US and in their with their trading partners, we may get a little bit more clarity with respect to foreign exchange. But I think quite clearly that the dollar's glimmer, that the dollar's safe haven has suffered a bit of a blow, and that could be something that stays with it through the Trump administration.
What about the impact of rates here? The Fed is expected to stay higher than other major economies for now, but could a tariff-weakened US economy spark a rethink?
Well, this is really quite interesting. I mean, for now, it's very unlikely we're going to get an awful lot of clues from the Federal Reserve itself, because, of course, the data that we've had on the US economy to date has been pretty good. We don't have an awful lot of firm data regarding the post-tariff economy just yet. So we do have to wait a little while before we get that. And we also have the inflationary risks too. So we have this stagflationary environment potentially for the US when growth could be hit quite hard, but price pressures may be on the increase. Now, of course, the jury is out with respect to how much inflation we'll have. Some economists estimate it will be a one-off effect from price effects. Others think that the price effects could come through in coordination or perhaps simultaneously or perhaps, one after each other. And that could potentially, in the latter environment, lead to workers demanding more pay increases, which would have secondary effects. So we have to wait and see how that pans out too. And if the latter happens, with secondary price impacts happening, well, the Federal Reserve won't be able to cut interest rates as much as perhaps the market is currently expecting.
Do you think all these pressures on the US economy are going to accelerate this effect you mentioned of the dollar essentially losing credibility?
Well, that is certainly a question that we've all been talking about over the past couple of months. I don't think that is a question that we can see in isolation. I do think that we have to look at perhaps the euro fundamentals. I mean, a month or two ago, we were all talking about the game-changing situation in Germany with a loosening of the fiscal brake. That has made in itself Germany and Europe more interesting for investors, irrespective of what's happened in the US. And I think we can also look at Japan and say this is an economy which is just about emerging from 30 years of deflation. That in itself makes that economy interesting. We could potentially look and and perhaps hope that stimulus in China could lead to more domestic demand there, which could, of course, make China more interesting. So there are other factors going through, but the fact that the dollar didn't benefit from a safe haven flow last month does leave this question unanswered about if the US or if Trump specifically is changing the geopolitical environment, and also globalization is really altering. How much wiggle room is there to impact the dollar's status as this safe haven?
That was Jane Foley of Rabobank. Don't forget you can watch more videos on Reuters.com.